Google stock, guys, is down more than 8% today on earnings day as the stock price is down over more than $100. So, guys, the big day where Google has announced earnings, and unfortunately for the company, they were off in terms of the amount of revenue that they were expected to generate in the quarter that had just passed. So they had expected revenue, guys, to be around $37.33 billion, and they came in revenue with $36.34 billion. So Google, guys, basically missed their expected growth by $1 billion, which for a company as big as Google, that is a significant amount of money. If we look at their earnings per share, guys, Google netted $11.90 per share versus an expected $10.61 expected. So in that category, it came out very good. And so we're going to look at some other statistics, guys, with the company. Paid clicks on Google properties, 39%, and cost per click on Google properties was 19%. And so basically, if we look at Google stock and the history of the stock and what it has done in recent years, is that year by year, Google has been experiencing growth of anywhere from 20% or higher year by year. And so right now, as of right now, they are currently decelerating growth. So they're not growing as much as, what they've been accustomed to in the past and prior periods and everything. And so Google, of course, has attributed some of that to, well, there's a slowdown in Google ad revenue. So the growth of their ad revenue has substantially gone down in terms of how much growth they get per quarter. So normally they would experience anywhere from 20 to 30% in ad revenue, and right now they're up 15% as of the most recent metrics that came out. And so the Google CEO said that one of the big things was the changes to the YouTube monetization requirements on YouTube. And so what happened is that in order for YouTubers to be able to monetize their videos and put ads on the videos, they have to meet certain requirements, which basically are that your channel must have 1,000 subscribers, you must have averaged about 240,000 minutes of watch time within the last 365 days, so last year, and that accounts to 4,000 hours of watch time. And so YouTube basically did this because they wanted to filter out YouTube channels where, let's say, a random YouTuber with no subscribers at all was basically taking someone else's video, putting ads on that video, and taking credit for it as their own video. And so YouTube felt that putting this new requirement in place would be able to filter out those YouTube channels. And also, I think with the watch time especially, it shows that your channel is basically an active channel and everything. So anyways, guys, just wanted to explain that very clearly. So I think that definitely, and so what's happened is all the smaller YouTubers, even people like myself who are, still building, we aren't able to put ads on videos, so that affects the growth for Google. So it's not just the fellow smaller YouTubers being affected by this new requirement, it also has impacted the growth of Google's ad revenue because, before they were getting all these ads out on these channels. And so Google, guys, has ramped up employees. They've ramped up up to 18,000 more employees year by year. So they are, and those employees are not just low-wage workers. Those are employees probably making, $70,000 to $120,000 a year. And so they're, taking on a lot of responsibilities. And the thing that is very enticing with Google is that they have a very healthy balance sheet. So when you look at cash flow coming in, and you know, the debts that they're having to pay. It's a very healthy balance sheet, and that's one of the big major factors you want to look at in a company, because if a company is having to pay back a lot of debt, there could be a lot of interest involved there, and it could take a lot of time to pay that back. But if a company is having a lot of free cash flow, they can do a lot of things with that money. They can reinvest it back into the company. They can do things like buy back shares, which I think Google is in a very good place right now to be able to do something like that, to be able to buy back some shares right now, being that the stock went down as, you know, much as $100 today. So guys, Google is looking at a very healthy PE ratio of 22 to about 23, and this is a very safe stock if you're looking to potentially invest in. So before, I just want to make it clear, if any of you guys are going to invest in any company, be sure to do your own research. This video is not you know, telling you where to invest your money. It's just simply being education on the company, on the stock. And then from there, I would suggest to do your own further research on whether to invest in it. So yeah, with having said that, guys, in offering my opinion on the Google stock, you know, I think that with this stock, it is a very safe stock that to invest in for the next 5 to 10 years, and you will see a nice return on your money. So if you're if you're new to the stock market, and you know, I'm still learning as I've been getting into it the past up to the past year or so now, getting there. Yeah, you know, this is a very good company to potentially invest in for the long term and to get a nice return. And also, when you look at, you know, their Facebook stock is another thing to bring up, because Facebook is another company that does a lot of ads and advertisements. And so when you're looking at between Google and Facebook, those are both good stocks potentially to invest in. And because when you think of smaller companies or even major companies, when they need to be able to put advertisements out there, you know, they're going to go through one or the other, meaning they're either going to go through Google or Facebook. So again, if you own both of those companies, then obviously you're going to be benefiting either way. And so that's something else to be able to factor in. And, you know, YouTube search and Google search are big advertisement players, because again, you know, those ads are always coming at you. And so, you know, again, both of these companies are potential very good investments for long term. And so yeah, I mean, that is the outlook on the stock moving forward. So again, it's a very good opportunity to buy into Google right now, being that it has dropped. And I don't think Google has in quite some time dropped as much as it did today, guys. 8% drop. I mean, it's probably had some days of like 3%, 5% drops, but nothing as monumental as what we saw today for Google stock. So guys, if you like this video, be sure to smash the like button, and if you haven't already, subscribe to the channel. So I do sports videos and I have my stock market videos. For those of you who only want to see particularly stock market videos, I have a specific playlist where all my stock market videos, I'll be organized into that playlist. So if you do subscribe to my channel for stock market videos, I apologize for the excessive upload of sports content videos, but just wanted to make that clear to all of you guys. So thank you for all watching today's video. Until next time, I'll see you guys again. Thanks for watching.